Good day, everybody. It's Greg Schnell, and I am here with a market review on Monday, February 24th, after the carnage left on the back of the COVID-19 virus. So lots to talk about. I think if we have anything to worry about, it's that this is the initiation move of the selling. And so kind of where my focus will be at over the next 30 minutes here is just kind of explaining what's going on in a bigger picture, and then trying to work back to why I think it's just time to let things settle. So I've titled the review "When Church Spires Topple" because we've had all of these parabolic surges, and typically they finish like the other half of a church spire. And while we see all of these starting to move, so I'll call it aggressively, that the real problem we need to be aware of is just underneath the surface, we had lots of issues going on. So anyway, here's all of my blogs. If you're looking for them, you can go find some there. You'll also find some on gregschnell.com. And contact information for me, new update at gregschnell.com. Always find me on Twitter at Schnell Investor, and website is gregschnell.com. So the agenda today, the selling has kicked in. I think that's fair to say. Advanced decline lines are being tested and / broken. That's a big deal. Looking through the Nasdaq 100, what I want to do here is just show, this has been the leadership group. So we're going to fly through some of those charts, and then the transports, they don't look great either. I do want to highlight one thing. So I did cover gold on the market buzz on Friday morning, Friday, February 21st, and the gold stocks were doing great. And then this morning, Monday morning, February 24th, gold stocks zoomed higher, gold zoomed higher. And then by midday, gold stocks, a lot of them had retracement bars where they were being sold into the rally, and the pop that they got was down. So today in after hours action, gold was already down $30. So really have to be careful in that gold sector. It was frothy, and now the fact that it would have been better if it had a $10 move and the gold stocks went with it, but that's not what we got. So be careful on the golds. Anyway, okay, let's jump into the charts. So first of all, this is the S&P 500, and you can see a bit of an arch there. This goes back to February 3rd, and boom, this was a pretty big move down, obviously. And on the daily chart, what we can see here is we had an uptrend that's clearly busted, and we're below the 50-day moving average. Now, that's not that serious, but this was the volume after options expiration. Normally that's the high volume day. This was big, and then we made a lower high in momentum but a higher high in price. That typical divergence isn't usually that good, especially once it reaches that on a daily chart. And we can see back here we had the same sort of thing in July. Looking on the weekly chart, this was our first red candle, so I realize people don't want to make it so severe, but I do want to point out just the market was so overstretched to the upside. Like this PPO level here for the S&P 500 rarely gets up into this 3% level, and we spent a couple of weeks there. When you see that level of momentum, that's pretty crazy. Just real quick from a 60-minute chart point of view, look what happened today. We had the VIX up all day and closed near the highs, and what we see on the market is it tried to rally later in the day and then gave it all back, and the S&P didn't close on the lows, but it wasn't that great. And just this is the 20-day moving average, this blue line, 20-day, roughly the 100 1-hour moving average, and this is a 60-minute chart, so 1 hour. What we see here is we've busted now below all of these on the Nasdaq, on the IWM, and on the TSX. So breaking down hard. Natural gas was down, but just kind of traded sideways. Oil actually closed at the top of the range for the day, but still down from yesterday and still below the 20-day moving average, so that's not that bullish. And this is the big reversal that we saw in gold. Now, it didn't take out yesterday's low, but clearly the initial surge we had didn't have a lot of support, and then it fell in after hours. So careful on that gold trade. The bonds are an interesting one, and I've covered it off with the subscribers. There's one particular setup that makes me want to start looking for a reversal in the bonds. Now, we're not there yet, but over the next couple of weeks, months, we have this setup that could make for fascinating momentum trade on the bonds just when we thought it was all going to go one way. So anyway, right now it is still going one way. Fully expect it to for the next couple of weeks. But some of the charts are starting to give us this look that we could start to expect a big momentum change there. Anyway, it's on the radar, but not imminent. But I think that's one of the big things that I'll be talking about over the next couple of months, especially with the subscribers. UUP, what we see here is a sideways move for the day. Nothing really pressing, but just to be aware of it. So I wanted to talk about the advanced decline lines. They're down here in black, and what you see is this advanced decline line is just being broken for the first time since the December 2018 lows. I would say that's a pretty significant place to expect this market to move down quite quickly. And when you typically get these long advanced decline line breaks, it's a good place to be aware of the trend change in stocks advancing. And we can see that the price is already broken down over this short period, but even in here, we had a lower slope going on in the May, June, July, August, and we were just getting small moves. This I expect is going to be a larger breakdown, and it's because everything was so stretched. Most things will need to reset. So that was for the S&P 1500. When we look at the mid caps, what we see is this trend line trying to break. And again, back here, it doesn't anchor on the point very well. If it did, it would have already broken, and I guess we could do that. But my point is there's another trend line here between this point, this point, this point that suggests that's where it should be. Anyway, we're sitting on it tonight. And then looking at the S&P 400 actual price action, I'm touching this one just above this one, touching this one. So I've kind of taken a best fit line here, and we're below that right now. So not that positive. And again, that's the mid cap. Looking at the small caps, what we've got here is here's the trend line off the 2019 lows, and you can see running up. And then here is the trend line for the advanced decline percent, and that's clearly broken. When we broke back here in 2018 in September, that trend line was a pretty meaningful one. And again, roughly the same slope. It was a little sharper upturn than this current slope. You can see we've gone sideways for roughly since December for the small caps advanced decline line, and now starting to break down. Wouldn't take much to take out I'll call it the February low, or the late January low, which was after the Dow had a down 600 day, and we kind of collapsed onto that point and then bounced. But in this case, very little rally capability. So that's kind of broken down my different market cap size. When we do the two indexes themselves, the Nasdaq Composite has broken the uptrend line. Here is an advanced decline line I've got going for them. And you can see we had this big one coming down here. When we finally got this breakout, that was a nice push. Now we've started to make a lower high again. So the Nasdaq advanced decline line doesn't always line up as positively as, say, that S&P 1500 line I showed earlier. But what we see here is there's one big trend line coming through the lows, and that is still intact. I would say the smaller trend line since the August rally point. We held the lows in August and October and then rallied out of here. And so what we've got here is kind of a trend line with 5 or 6 touch points. So I think that's probably the most valid. Let's look for one more. And this is the New York Composite, and its trend line, as you can see, trends more with the market making higher highs. But what we see here is it's been struggling. You know, we're roughly at the level we were at mid-January, and right in, call it the 15th, and now here we are mid-February, haven't gone much further. So we were up a little, down a little, but we're back to kind of that level. With today's dump, we made a lower low in terms of the moving average of the advanced decline line. So we kind of bottomed out here. We're now at lower levels. Now, typically this isn't a bad place to look, but what you'll also notice in most of these is these big initiation down thrusts are not usually the best place to start partying, getting long. So I would just say hold off on this first push and at least give the market time to settle out. With the advanced decline line here on the New York Composite, it's held up better, and it has a lot of other factors in there in the actual makeup of the New York Composite, what's traded on there. Some much more defensive tone stuff. So anyway, if that starts to break down, and it hasn't broken the uptrend line yet, it has clearly broken this uptrend line, and that was in January. Pulled down, now made a lower high, breaking lower. So again, for the few people who wanted to play the higher highs only on the Nasdaq 5 or Nasdaq 10 stocks, now all of a sudden it's reversing. But we also had lower profile here in terms of the number of stocks enjoying the rally and the amount of time they could stay bullish. So this was kind of a 2-month bulge. This was barely 2 or 3 weeks. So anyway, starting to roll over hard. Okay, let's get into the Nasdaq 100, and I've sorted this group right here by the scooter ranking. And again, the SCTR ranking is like a sports ranking for stocks, putting the strongest price charts first. The way it's measured has some long-term, short-term, mid-term time frames, 200, 125, 50, 20, 14 period, 3 period. So really a variety of different time frames to try and give us a feel. But the point I want to make on Tesla here, this is a classic situation for a good potential double top where you have a big spike high, you run back up and you test that prior high and you can't make it. Tesla was down 7%, and again, this is one day today, but the problem is we've now made a lower low compared to the previous week. So in here, all the way up, this was, since here we had a higher low, higher low, higher low, higher low, higher, higher, higher. This is our first lower low. And on a weekly chart, that can be important. Now, it doesn't mean Tesla still can't try to test this high one more time. That high is also a round number high, like up around 1,000. That just took Amazon a long time to try to get through 2,000. Took Apple a long time. When it reaches a round number level, sometimes they struggle there, and in this case it was 400 or 380 for Tesla, but call it 400. Anyway, what we have here is a big parabolic advance that looks like it wants to reverse. So Semantic Corp, this big sudden jump up here, this chart has so many jumps up here. It's not a chart I want to trade. I do appreciate that this was a nice big move, but I would avoid it. Nvidia right now is trying to make a double top, or is trying to break through a double top. So it pushed above, gave it back, and it's down 7% in one day, and agreed. Everything was down today, but this was obviously down double the indexes, so that's not that good. Regeneron, this is a chart I actually like out of the whole group, and one of the things today, so that and Gilead were the only two up on the Nasdaq 100. But what you see here is this downtrend line was breaking anyway, pushed up, and I could run it off the exact peak of this, and it pushed up again. But look at this outside bar. This is really nice. It tests lower, takes off and goes higher, and closes near the highs. And it's not quite getting above this 442, but you can see this. All of the people who own the stock at any other than these 2 weeks in here are all now in the money. So we have this area in here that may still want to sell out near the highs. But I think this is a really impressive move, and I don't know anything about their business. I just know that this chart is starting to shape up nicely and could potentially be one of the big leaders on the next rally. So Advanced Micro Devices, this started to break the trend line today. Hasn't broken the relative strength yet, but that starts to concern me. The full stochastic is starting to weaken here, and the PPO is very close to a sell signal. So again, these are weekly charts with 1 day on them. But the point I want to make is just, let's see what's working and what's starting to break down. Biogen, this chart's just too choppy for me, but anyway, it's one of the better ones because of this recent sudden surge. Not something I like to trade when it's that disorganized. Lam Research, nice uptrend, has broken the uptrend here and has broken the uptrend in relative strength so far. Again, wait for the end of the week, but that's a semiconductor technology stock that seemed to be breaking down. We all know what happened with T-Mobile and the merger, so that looks good. Charter Communications, this chart is still fine. Everything's still running up here. It did okay today. It was down less than the indexes, so that's pretty good. Apple looks to me like it's completed its rollover here. So you had an uptrend in relative strength going back at least 6 months. It's breaking it now. There's a trend line down here around 280 that might catch it. It's starting to break the PPO uptrend line. I still have a problem trying to be short Apple with a big buyback from the ownership there. Skyworks Solutions had spent some time above the prior highs, call it 110, ran up to 130, pulled back, and is now trying to bounce off this level. This is a pretty critical level for it, but I will say the PPO momentum has rolled over, and the last 2 times that trend in momentum has rolled over, it's been easier to sell the stock and or get an option to hold the stock so that it's not so so you don't get back the gains you made. Lululemon, this chart is still up and to the right, nothing changing here. The PPO is still holding up. The relative strength compared to the S&P 500 is holding up, and it fell about the same as the indexes, so no big deal. Vortex Pharmaceuticals, this pushed up nice and high, still looks okay, nothing wrong there. Gilead, this was the other chart that made a nice move today. And what you see here is look at this jump through $70. I'm going to just click back there. What I want to point out on this chart is the volume for today alone was almost the same as a whole week's volume last week. So there's lots of interest here in this name as it broke out. And again, it's one of the better looking charts in general. It broke out 2 weeks ago, and for it to hold up like it did today, I think there's something definitely interesting there. NetEase is trying to double top. We're going to see a lot of that here where lots of stocks are getting up to their prior highs. Here's Activision Blizzard. This is trying to hold a trend line here. JD.com, a little bit too hard to draw the trend line here. We can see this $43 level kind of right in the middle of the range over here. So not support, not resistance, just kind of holding in there. It did drop below the 10-week moving average. Applied Materials, this is another semiconductor stock, and it's starting to break down below the upsloping trend line. It's got a sell signal on the PPO. Has not broken the relative strength trend line yet, but when it does do that, back here in 2018, those were good places to start to take money away. BioMarine Pharmaceutical, making higher lows and higher highs. That's a nice uptrend. Looking at ASML Holdings, again involved in the semiconductors, trying to hold the trend line. If all of these semiconductors start to break this trend line later this week, I think you really want to be careful. Normally when the semis are moving down, so is the market. Fastenal pushed up to higher highs and wasn't too bad today. Held up better than the indexes. Microsoft down 430. Big trend line in place here. It bounced right off the trend line. The one thing I would just say is everybody's in the stock. I don't know who would be the new buyer. Autodesk, you got a horizontal resistance level here, ran up, and it now I would expect some sort of support trying to hold at 180. Netflix, look at this. It's sitting here trying to get through 2 years of highs. And if Netflix rolls over, look at how quiet the volume got in the last 5 weeks. Just a regular low, and even options expiration volume week was low. Now, again, they had a short week with options expiration, so that can add a little bit to it. But I would just say it's well below its moving average of volume. And the other thing is price is sitting here trying to break through prior highs. So if this uptrend goes on Netflix, I'd be very cautious. I do not want it to roll over so close to zero. And we saw when it did that back here in July that it was a big pullback from 384 to 250. Adobe, this chart just keeps working up and to the right, but it did gap below its 10-week or below the trend line and is now testing the 10-week moving average. Intel Corp, uptrending. The only thing I could say here is there's horizontal support around that 60 level. We'll see if it can hold up that, but this was starting to be one of the nicer moves for a stock that hasn't done much lately. So here's Ross Stores, big, beautiful uptrend, nothing to draw there. Micron Technology, another semiconductor here, trying to hold the upslope, hitting horizontal double top area, and the PPO trend line is still holding very close to breaking out one way or the other. Monster Beverage double topping here. We'll see if it's got any horsepower. And then CSX sitting here trying to double top as well. Jumping into Mercado Libre, just an uptrend here. Briefly broke out, gave it back up, and was down 8% today. So a lower high in momentum right here with a higher high in price would be a little bit concerning for sure. Alphabet trying to hold the trend line here just below the 10-week moving average, and relative strength is still fine. I think this is one of the stocks I'd like to buy on a big pullback. If it could come down, pushing the momentum indicator down to this uptrend in a couple of months or whatever, that might be a nice place to get back on board with Google. NXP Semiconductor, we see this big uptrend. The price action is sitting right on the trend line again. So over and over and over, all of these stocks gap down to the trend line. All the computer algorithms kicked in and said buy it on the trend line. Some of them bounced a little, some didn't bounce at all. So keep watching them. I think if they fall through here, that is pretty much the ignition switch for the market to go lower again. Costco is still holding an uptrend line, but lots lower momentum here, so I'm a little bit cautious on the name. Cintas Corporation, everything's uptrending, no big deal. Amazon, this one's another definition of double topping, triple topping, 2018, 2019, now 2020. Spends a week above here, pulls back the second week, and now gaps below it. Really important place on the chart for it to hold. That same sort of volume profile as Netflix, where volume got lighter and lighter and lighter. Sirius XM double topping. Cognizant, nothing great. I would just say it's trying to get through its 52-week highs. I don't like the big gaps in this chart, so not something I'd want to trade. Verisk Analytics, grinding higher, nothing wrong with that. Looks like it's trying to roll over in terms of momentum at a lower high. That would be a bit of a problem. Baidu broke its uptrend today and dropped below the 10-week moving average, rolling over right at zero. That's never good. Okay, let's just quickly look at the bottom end here. Here's Cisco. It really needs to hold a 2-year trend line. American Airlines, very rough shape, needs to hold a trend there. Travel has been hit hard. Take-Two Software looks like it's breaking down. I think that's a problem. Booking really gapped down hard. United Airlines, this one broke down too. So all of these airlines look in trouble. Alexion down near the lower corner, and Xilinx, another semi. Hasbro Toys really breaking down hard. Okay, I briefly want to jump over into the railroads, and the point is everything, not just the railroads, but the trucking industry. All of these charts are damaged goods. Let's jump in and just look at them on a 10 per page basis here. What we see on Kansas City Southern, one of the strongest rail stocks, the momentum trend line is close to breaking. That would be a caution thing there. Here's XPO Logistics. It's trending higher, but about to break that trend line. PPO momentum is making sideways moves so far. That's okay. The relative strength uptrend broke earlier and is now just had gently gone higher. So it's okay. When we look over, it's right around that round number, $100, so nothing great there. JB Hunt Transport breaking down below its 40-week moving average now. We can see the momentum rolling over ever since this trend line broke. That was a pretty good place to be aware of. Here's Kirby Corp. This one was double topping as well and fail. Matson sitting here trying to get through prior highs, couldn't, jogging sideways right here trying to hold on. We'll see if it can. Momentum might go below zero on that, which is a problem. Canada's two railways really performed well today, and that's because they probably move a lot of crude by rail, but minus 0.79% but the uptrend looks like it's starting to weaken. It is below the 10-week moving average. Again, might just roll over here. Looking at this GATS Corp GATX, this is doing nothing, double topping. United Parcel Service, this is Cramerica's favorite. All of a sudden this thing is breaking down and now gapping down below. It's still got some support down here, but this is a pretty messy chart with all these down gaps and up gaps and down gaps. Looking more difficult to kind of plan what's going to happen there, and especially on the back of all of this virus. Schneider Transport. What we see here is it's rolling over. It's below its 40-week moving average. PPO looks ready to go below zero. That's not good. Delta, trying to hold this support trend line, but again, another double top situation, or trying to break through prior highs, failing and rolling away. PPO could go below zero. Alaska Air got stuck trying to double top here and rolling over, going below the 40-week moving average. Union Pacific here, big uptrend, trying to get through prior highs. It's held up here for 6 or 8 weeks. When you zoom in, it looks a little better. I would just say the big picture on this is we're coming to a decision point and the PPO is already rolled over, so I'd be cautious there. Landstar Systems, another double top where it couldn't get through. Expeditors International, another topping structure that couldn't get through. Looks like it wants to start breaking down here. Momentum is right at zero, so that needs to start to turn up if it's going to go anywhere. Jetblue Airlines, here we see that it finally broke out to new 52-week highs, hadn't done much for 4 weeks, now gapping back below support. I think all of these travel areas are going to be a problem. I know some of the cruise lines got hit pretty hard as well. So here's Norfolk Southern, big uptrend again, potentially double topping right here, so that's a problem. Spirit Airlines, we see this one gapping down. No real reason to put a line on this chart other than $35 has kind of been support or near support. It looks to me like that's going to fail, and it's rolling over under zero. That's a problem. Ryder Transportation Systems, just this thing's been ugly for years, and it just got uglier this week. It held up not too bad today, but I would just say that's because anybody who wanted to sell it's probably already left. Canadian National Railway, this one hasn't done anything for 6 months. PPO momentum had started to turn up here. Now it's rolling over. Of course, they've had some protests along their rail lines. United Airlines, this one's rolling over, and very well, it did make new 52-week lows today, so that's not good. And then working into Southwest, this chart, I'm shocked at how well it's held up with all the 737 MAX things going on. Uptrend here, about ready to break. It is breaking the uptrend in momentum, so that's a concern. CSX Corp, double topping situation again. Here's a railroad, hasn't done much in 2 years, but go sideways. I guess that's rails. Rails, you just go straight down the track. And then here is the downward trend in momentum. It had briefly tried to break above it. We'll see if that keeps holding up. And here's C.H. Robinson Worldwide, again, new 52-week lows, nothing good there. American Airlines, this chart's breaking down into the bottom right-hand corner. And FedEx Corporation, this one has tried to stabilize here. At least the momentum is starting to trend up. If this could start to break back above this trend line, and it had just done that and now gave it back up, let's watch to see if it goes back down and can make higher highs. So thanks for taking the time to join me. Again, lots to cover off here, but all of the trend lines are breaking on the advanced decline lines. Gold acted terribly, so stay cautious out there. I know the most important thing to do here is just try to protect capital. Good luck and stay cautious. Thanks, everybody. Bye-bye.